The theme addressed in this session is cost behaviour. And what we'll be considering is how costs change in a business in response to changes in its activity level. So objectives of the session is first of all to explore how business costs might change in response to changes in activity level. There are many decisions managers might take which have such an impact. So decisions such as whether to introduce a new product or a service, that would increase the activity level of a business. Whether to discontinue an existing product or service, which would reduce the activity level of the business. A planned promotion initiative to promote new products or new services, or to promote existing products and services. Again, that might increase the activity level. So in order to financially evaluate such initiatives, it's important that the business is able to understand its cost structure and therefore understand the potential impact of the decision on the costs incurred by the business. So another objective of this session will be to explain the nature of different types of costs. So we'll examine variable costs, fixed costs of a business, what are called curvilinear costs, stepped costs, and semi-variable costs. So the session will introduce the nature of all of these different types of costs and consider how they might respond to a change in the business's activity level. Okay, so that's what we mean by cost behaviour in this context. How the costs can differ in terms of how they respond to changes in activity level. And what we'll find is that different types of costs respond in different ways. So two of the key types of costs are variable costs and fixed costs. So variable costs are those that do change in response to an activity level change. So when the activity level increases, these costs would increase, and when the activity level and output level decreases, these costs would decrease. So that's variable costs. And then we have fixed costs, which remain constant with changes in activity level. So they don't respond to an increase or a decrease in the output or activity level of the business. So let's have a look at examples of variable costs then. So here we've got direct materials and direct labour. So direct means they are directly used to produce the product or the service that the business sells to its customers. And as we've seen, these will change in response to changes in activity level. So let's take direct material costs. If a business produces a product and it requires £20 worth of materials in order to manufacture that product, that is referred to as the direct material cost. And the total variable cost incurred can be calculated by multiplying the variable cost per unit by the activity level. So if, for example, a business was to produce 1,000 units with a variable cost for the materials of £20 per unit, the total direct material costs incurred would be £20 per unit, multiplied by 1,000 units, £20,000. So this allows the business to estimate how many pounds worth of material it would require to produce 1,000 units. So they are variable costs then. They increase as the activity level increases. So if we were to depict these graphically, they behave as shown by the green line on the graph there. So that green line shows that as the activity level increases, as the units of output increase, as the business makes more products, the costs increase. So we've got activity on the bottom, the x-axis of the graph, and we've got costs on the y-axis, the vertical axis. So in this case, this illustrates that 1,000 units of activity would result in £20,000 worth of direct material cost, as was calculated a little earlier. So that's what this would look like graphically. Next one, fixed costs. So these costs do not change when the activity level changes. These remain constant with changes in activity level. So within certain activity limits, and we'll come back to that point a little later in the presentation, these are unaffected by changes in activity level. So they tend to be incurred in relation to the passage of time rather than activity level. So an example here would be rent. If a business rents premises from which it operates and it pays £60,000 per annum per year to use those premises, that is an example of a fixed cost. So the rent is £60,000 per year, irrespective of the activity level. So it doesn't change with activity level. So if we were to look at that graphically, the yellow line there illustrates that type of cost. So that line shows that whatever the activity level is, the cost is £60,000. So it's a horizontal line, it's a straight line. The cost doesn't go up or down as the activity level changes. It's constant or fixed, hence the term fixed cost. So here are some examples of fixed costs then. So we've seen rent there, rent of business space. Insurance might be another example. A business buys a certain amount of insurance to protect against particular risks, maybe premises insurance, for example, and that insurance cost is unaffected by the activity level of the business. Administrative staff salaries. So the business has staff, it has employees who perform administrative tasks. That's a cost to the business, which isn't impacted by a change in activity level. So if the business was to increase its activity by maybe 5-10% next month, then the administrative staff salaries tends to remain unaltered. The same number of people are employed, and typically and often they are paid the same salary. So these are examples of fixed costs then. So let's now consider other types of costs. We've looked at the two main types, variable costs and fixed costs. We've distinguished between those two. So let's consider some others. So the next one is what are called curvilinear variable costs. So these costs, they do vary as the activity level changes. So as you can see on the graph there, as the activity level increases, the cost, as shown by the blue line, increases. However, not at a constant rate. So we don't have a straight line here. It's a curved line. And the slope decreases as the activity level increases. So what this shows is economies of scale. So an example here would be a business which uses materials to help manufacture products, and suppliers offer discounts of reduced price for higher quantities of materials bought. So the suppliers of the materials are willing to engage in contracts through which, if the business has high activity levels and therefore purchases high quantities of material, the price per unit of material is reduced. They have a discount, a lower price. Okay, so the line is curvilinear. It doesn't constantly rise at an even rate. We have economies of scale, benefits from higher levels of activity. So in practice, we might find some businesses have costs which behave in that manner. Another type here are what are called stepped fixed costs. So earlier, the assumption was that fixed costs, such as rent of premises, would remain unaltered with changes in activity level. The definition, however, did indicate that that would possibly be within certain ranges of activity. In other words, if we take rent as the example here, the business is able to operate at a particular activity level through renting space, and if that activity level increases, it can still operate in the same space initially. However, it's likely to reach a certain point where the activity level has become so high that it needs more space. It needs additional premises and additional manufacturing space, factory space, maybe more office space. And therefore, it reaches a point where it's necessary to rent additional space. And that's represented here on the graph by the point at which the yellow line steps up. So when that point's reached, the cost steps up to indicate additional space being rented. So, as we can see there, the line takes the shape of a step. It's not just a straight horizontal line across all activity levels, but rather it indicates that when the increase in activity becomes relatively high, then these costs might actually increase. So these are called stepped fixed costs. And this might be the case for many fixed costs. Rent of premises, administrative staff was another example given earlier. So it might be that the admin staff employed can cope with a certain level of activity in the business, but when that increases significantly, those staff may be unable to cope with the work that brings, and it might be necessary to employ more staff. And again, the cost would step up in the manner we're looking at on screen there. So stepped fixed costs, and in practice we might find many fixed costs actually behave in this way. And finally, semi-variable costs. So semi-variable costs are costs which have a fixed element and a variable element. So they have elements of both. So to take the example on screen here, we have the salary here of a member of sales staff. So this is a person in the sales team, and they are paid a fixed salary. They're paid a fixed salary denoted by a horizontal line, the yellow line being horizontal. However, once a certain activity level is reached, they are paid additional payments. So once a certain activity level is reached, the sales staff is paid a commission for extra sales. Every extra sale they make beyond a certain level, they're paid some extra salary. And therefore their salary is now increasing with increased activity. It's constant initially, but once they reach a certain threshold, once they sell a certain amount of products, they're paid more money. And the staff's salary gradually increases with further increases in activity. So the business has deemed that it's worthwhile paying this cost in order to motivate staff in the sales team to generate more sales and help the business to make additional profit. So another type of cost here, a cost which is neither fixed nor variable. It's what's called semi-variable. It has an element of each of those. Okay, so that concludes this presentation, which addressed different types of costs in terms of how they behave in response to changes in business activity level.